Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week, we're covering the expiration of the temporary exemption for the $800 annual tax that's available for certain new entities. At Spidell's Federal and California Tax Update, you'll get updated on everything that happened during the year, including maximizing the new clean energy credits, Secure 2.0 Act changes going into effect in 2024, conformity to the Secure 2.0 Act, the pass-through entity elective tax, and more. To see a full list of topics and get registered for a live webinar or in-person seminar, go to caltax.com. The temporary exemption for the $800 annual tax available to new limited partnerships, limited liability companies, and limited liability partnerships is scheduled to expire next year. As the law is currently written, the exemption only applies to the first year of business of an LLC, LP, or LLP if the entity registers with the Secretary of State's office on or after January 1st, 2021, and before January 1st, 2024. This means that if legislation is not enacted next year to reinstate the exemption will no longer be available for new LLCs, LPs, and LLPs doing business in California starting with the 2024 tax year. However, the exemption from the $800 minimum franchise tax for corporations will remain in place. The annual tax only applies to entities doing business in California. An out-of-state entity that's filing a California return only to report California source income, and that is not doing business in California, is not registered with the Secretary of State, and is not organized in California, is not subject to the annual tax. An example would be an entity that is a limited partner of another partnership whose only California source income is California source income passed through from that partnership, provided the income does not exceed the economic nexus thresholds. The $800 annual tax for LPs and LLPs is due by the original due date of FTB Form 565, Partnership Return of Income, which is March 15th for calendar year entities. In contrast, LLCs have to prepay the annual tax by the 15th day of the fourth month of the LLC's current taxable year. In other words, LLCs pay the tax as a first quarter estimate. For the 2024 taxable year, a full year calendar year LLC is required to make the $800 payment by April 15th, 2024. For new entities, the LLC is required to make the payment by the 15th day of their fourth month of organization. Make sure your clients forming a new LLC are aware of this tax payment and budget for it. Payments for the annual tax can be made by WebPay, credit card, electronic funds withdrawal, or by check. Check payments by LPs and LLPs have to be submitted with Form FTB 3587 payment voucher. For LLCs, the payment is submitted with Form FTB 3522 LLC tax voucher. Like the LLC annual tax, the LLC gross receipts fee is also prepaid. Except for new entities, the fee is due by the 15th day of the sixth month of the current taxable year, which is June 15th for calendar year taxpayers. LLCs use Form FTB 3536, estimated fee for LLCs, to remit the estimated fee. The estimated fee has to be at least 100% of the current taxable year fee. If the taxpayer's payment is late or less than the amount owed, the FTB will assess an underpayment penalty. The underpayment penalty is 10% of the difference between the fee paid and the fee owed. But there is a prior year exception if the timely paid estimated fee is equal to or greater than the prior year's fee. The prior year exception applies to a new LLC, so no estimate is due for the first year. Stay up to date with state tax law changes with a subscription to Spidell's California Tax Letter. You can see what's included with this monthly publication and subscribe at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.